Welcome to the latest installment of the Long Only Podcast. I'm Doug.
Gerry.
Gerry, how's it going?
It's going good, Doug. How you doing?
I'm all right. You heard all my complaints over lunch
Yes.
that you paid for.
Doug doesn't agree with anything I agree with on music, but we won't go there.
Pretty much.
Well, not anything.
And
It's okay.
Gerry won't let me write funny messages on the whiteboard behind me. So that's somehow we managed to be friends.
You do sound far away, though.
Do I?
You do.
Let me just making
I don't know.
corrections in real time.
Is your volume turned up?
I think so.
Anyway, it's fine.
All
I
right.
hear you.
We'll make it work. You can hear me okay?
I hear you.
All right. Still working out video. Gerry,
Doug.
where we are today. It appears.
So I think last time we talked about, I hate making predictions, and here I am making predictions. I think I said I thought rates had peaked, interest rates had peaked. Today I'm going to say I think, generally speaking, stocks have bottomed.
Okay.
Or maybe the better way of putting it is the next major move in stocks will be up. Now, when that's going to happen, I don't know. But I think that, and so therefore, there, could there still be some more downside to go? Yes. But I think as far as major moves, so I mean, a move up 30%, I think it's up. So a move like that will be up. It's just where it begins from.
Why do you think that, though? More importantly.
Well, for one thing, I think if nothing else, we're going to get, for lack of a better term, goosed by lower interest rates sooner than people think. I think
probably
that we're
because it's election season coming up.
There's that.
Yeah.
Which is not a good reason why.
No, definitely a mixed bag.
Yeah, I also think further along, we may be setting up for a 1970s style reversion back to some sense with respect to policy. Remember, the 70s was horrible, and we went through 10 years, right, of relatively high interest rates, ever rising inflation. Remember the whip inflation now? You might be too young for the whip inflation now. The win button. Whip inflation now.
I remember 8 is enough. That's pretty bad. In the 70s.
I don't think was that the 70s. I thought that was more like early 80s. But whatever.
No, it started in the 70s.
Okay, you're our pop culture guru.
Yep.
So I think that a couple of things are playing into it, and what nobody's talking about, but if we have a major political correction in there, and with that a major policy correction, kind of along the lines of the Reagan Revolution, which brought us 30 years of prosperity, that could be significant, because what's different now than then is there is a lot of very significant things happening technologically that make businesses far more efficient. I mean, what we're particularly impressed with right now, and it's not to say that every single company is doing great. They're not. There's struggles out there. But in the aggregate, we're really impressed with how well companies are doing in a very difficult time. The well-managed companies thing matters. In front of fertile fields of future growth, to say 5 times in a row. So, if we do get any kind of reasonable policy correction, which is going to have to come from a political correction, because right now we don't have that. We're holding the fingers are in the dike, holding it all off. And as I say, companies are doing a remarkable job. But just imagine if we had a less regulatory burdensome environment. Just imagine if tax rates somehow got flatter and lower. Just imagine if people were the entrepreneur was unleashed on a much more level playing field than what we have right now, where incumbency wins a lot of times. Or let's put it this way: incumbency has the advantages, and therefore the bigger the company, the bigger the advantage. Cronyism isn't alive and well, unfortunately, in today's economy. So I think, to what extent that can be at least held off, if not reversed. If it's reversed, then Katie bar the door. It's all speed ahead, full speed ahead. So that's my my short version of the update. I think there's going to be we'll think about more of that kind of thinking, because nobody's really thinking along those lines. Nobody's thinking that so many things have gone wrong. Heck, for the 21st century. might there be a correction to the other side that is meaningful? I think there could be. And if there is, we could see with the combination of productivity that comes from the natural enhancements that we've been seeing from technology, as more and more, one of our major narratives is the digitization of non-technology enterprise. I think the number's something up until, say 5 years ago, for the previous 25 or 30 years, almost all technological advancement within company frameworks was done inside the technology sector itself. In other words, they were coming up with the technology and they were adopting the technology. What we're seeing now, and it's been going on for 4 or 5 years, is the digitization of that part of the economy that is not technology as far as their overall business, but is adopting technology and becoming much more efficient. And so I think that, and that those numbers are something like, 25% of the economy is technology, and they were adopting 75% of the technology. And now it's the 75% of the economy that's non-technology is now adopting technology and helping their business. And, it's not to say, and you and I would agree, and there's plenty that would also agree, some that would disagree, that there's a lot of things about technology that have not been as good as, and have hurt certainly the culture and society. But from a business standpoint, productivity enhancements that come from it are certainly real. And so that could be maybe a little bit of a positive spin on things that we don't hear much these days, but stay tuned. I think that could be very possible in the next couple of years to see, depending on how things go.